Hey, Tim, how are you?
Hey, I'm good, Stacia. Good morning.
Okay, so
Nice.
we're going to talk about something that nobody wants to talk about today, taxes, but we're going to talk about how to avoid taxes on real estate transactions.
That's right.
So there are two main types of real estate properties. There is a primary home and an investment home.
Or second
Or a
home.
second home, yeah, and a second home falls into the investment category for tax deferral or avoidance tactics. I would like to start out by saying Tim and I are not CPAs, and for
Or
all more
1031 exchange intermediaries.
yes, for all information on taxes, please consult a CPA. But from the real estate perspective, we're going to talk about primary residence and investment properties. So, if you want to avoid paying a capital gains tax on a primary residence, you must live in the home for how long, Tim?
At least 2 years.
2 years. That's not 11. Or,
1 year, 11 months. It's
thank you.
got to be 20.
It's not enough. It has to be 24 months. We
Yep.
usually tell people 2 years and at least one day just to make sure. So if you live in your primary residence for 2 years or more, you can avoid paying a capital gains tax on a gain of at least $250,000
If you're single.
if you're single, or $500,000 if you are married. So again, live in the property at least 2 years, 2 years in one day. That's what we like to say. And you get to avoid paying capital gain on $250,000 of profit if you are single, and $500,000 if you are married. The cool thing is if you put money into your home, that adds to it. So, right, if you pay $250,000 for your house and you sell it for $600,000, that is more than your $250,000 gain if you're single. But if you put a pool in, that gets added to it. So,
Get to deduct that off of
thank
the
you,
gain.
deducting. So, lots of really cool tax tips and tricks there.
Closing costs can also
Yes.
be a benefit
So,
to deduct those as well
yeah.
from the gain.
So, profit off the house. 250 if you're single, 500 if you're married, live there for 2 years. Okay. Second type of property is investment properties.
Or second home.
Or second home, right? All our beach houses and mountain houses and things like that. So, Tim, how do I avoid paying capital gain tax on my investment property?
So how do you avoid paying capital gains tax on investments? So if you decide, I don't get to the beach house as much as I'd like, or that cozy cabin that we all love and enjoy, and you just can't get there. So you can sell it. However, if you sell it and just walk away, you're going to get hit with capital gains.
Yeah. If you take the money and run, you have to pay taxes on it.
Yep. And like we talked about, consult your CPA
Yes.
before you do that. But if you don't want to pay taxes on it, there's a way around that. It's called a 1031 exchange. So this is for any investment home, any second home, or if it's a primary and you decide that you want to keep it an investment. We'll talk about that in a moment. But yeah, if you want to do an exchange for a like property, you can do
Meaning you
so.
can't change a piece of vacant land into a house
Or
or commercial property, but you can change a beach house into a mountain house, or a rental condo into a rental home. That's what the like property means in this instance. So residential to residential, lot to lot, commercial to commercial. Sorry. Okay,
Right.
keep going.
Yeah, so that's how you can divert that. So you want to consult a very good quality real estate professional
With experience with 1031
1031
exchanges. Yes.
because it can be very messy if you don't know what you're doing, or if the agent doesn't know what they're doing, or if you don't have the right support in your mechanism or your wheelhouse. So CPA, definitely. You're going to also hire a 1031 exchange intermediary company,
Which your agent and title
will
company can
have,
do
or
for
title
you.
company
Yep.
can help you with if you're going through that process. Before you list that investment property or second home, you want to know what you're doing before you do that, because the moment you get a contract and it closes, you're on a very tight time window where if you don't accommodate or meet those time frames, you will be subject to taxable gains.
Capital gains,
Capital
people.
gains.
Capital
And
gains.
we want to avoid that.
Yep.
That's 20, 30, 35%, depending on your tax bracket, all that fun stuff. And no one wants to pay that big fee if they can avoid it.
Yeah.
So I was actually on a call with someone this morning that was asking about it. And one idea that we had, and something to keep in mind, is when you do sell a investment property, it has to be at equal or higher value
Yes.
of what you're from what you're selling to
Yeah.
the next property.
Yeah.
And so a lot of people don't know that. They think, hey, I can downsize and get
Take
something
some of the
else
cash
and
out or
take some of the
something. Yeah.
cash out. You
Yeah.
can't do that. You
Yeah.
have to exchange it for at least the same or a higher
Yeah.
property. So one of the cool things that I know a lot of people do, and I actually was just giving this suggestion to them, was breaking it up. If you got a really big place now and you're gonna want to sell it and you want to avoid taxes and it's an investment property, is break it up and go buy 2 houses.
Yeah.
So then you can take that and break up the profit
Yep.
and go buy 2 or 3.
Yeah.
And
It
as long as
multiplies your income, right?
it'll help your income
Yeah.
go up a lot,
Yeah.
because if you've got one property that's getting, let's say, $4,000 a month, and you can break it up and go buy 2, and you're slightly higher on the purchase price of both of the new ones,
Yeah.
then that would be okay. And if, let's say, you're getting 2,500 a month on each of them, now you're getting 5K a month as opposed to the 4K that you were getting on that big house.
Yeah. So it's an easy way to build your wealth.
Yeah, continue to
Yeah.
build that up, and that way,
And avoid taxes. Defer taxes.
Defer,
Defer
yeah.
taxes.
Defer taxes. You got it.
Yeah. So yay. All right. If you are interested in learning more about how to defer or avoid taxes on property, residential, commercial, reach out to us in the Phoenix area. If you're looking for anyone in the US, we've got amazing contacts for you as well. But the most important thing is make sure you work with a professional that has experience in these things. You can't call us and be like, hey, Tim and Stacia, I just sold my house. Now I want to buy another one and avoid taxes. It's too late, guys. It is too late. Has to be disclosed up front, and there are certain forms and things that need to be done.
Yeah. So just
Before you
create a
sell
plan
it.
in
Yeah.
advance. Give us a call if you need anything. Hit like, subscribe. Give us a call if you need anything. Thanks for watching.